Futures point to a higher open on the back of European trade as the Bank of England and ECB leave monetary policy unchanged. Economic data include jobless claims, natural gas inventory, while Smithfield and Williams-Sonoma headline the earnings calendar. I'm Taylor Schranz, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with TheStreet, and together we bring you the morning call. We've seen some impressive action over the past 2 days on the tape. Before we get to our trading plan for today, Scott, let's review the action on the SPX.
Yeah, well, we came into this week and we weren't sure what to expect. We saw some weakening signs, and then finally on Monday we closed below the 10-day, and then on Tuesday you had the worst day of the year. Yesterday we came in the oscillator, the McClellan oscillator was down like -80. So whenever you're down -80 on an oscillator, you can't be short. That's when you cover, that's when you look for some type of oversold bounce. So the question was, what type of bounce were we going to get?
Right.
So if you look at yesterday was a normal bounce, you know, it's par for the course. But today we're opening up right at like a grudge match. Like right now it's going to be like a Bulls Bears, who has control here. So let's take a quick look at the chart of the S&P and I'll show you exactly what I'm talking about. You know, here's the macro trend. First of all, if you're a macro investor and you have like 8-9 positions and you're riding out the trend, you weren't even tested. It was the momentum traders. It was the active professional traders who were trying to catch a short or look to be perfect. They're the ones that had to get out of the market once we broke this trend. So we came in, tested the 1340 level, held, and now we're opening right around 1363 to 1365. This is an area that if you're a bear and you're short, you better watch closely, because if we close above that area, you know, we could see new highs very soon, but if we reject that area, they still have a chance for some lower prices.
Right, and we have a lot of data coming out tomorrow, especially that jobs number. Everyone is focused in on that. Look, if it's not going to be a great number, this market's not going to respond well, but there's so much optimism built into it. You know, it's really anyone's guess at this point. I think if you're a long-term investor, like Scott said, hang out there. It's up to you as a momentum guys to really pick your spots.
Yeah, exactly, and that's what we try and do. And as a momentum trader, we've had the luxury of riding this trend for 2 months. So this is the first time that you might get a little bit spun around, because if you look here again as a macro view, let me show you a few key things. First of all, as far as the Fibonacci retracements that we talk about, you go right here, you could see we plugged it in from when we ignited on December 20th all the way up to the top. Okay, and here we take a look here and you see that we held the 25% retracement right into 1340. So rightly so, if you didn't buy back all your shares there, you were being prudent. Don't beat yourself up. That was a hard thing to do. We could have easily pulled back to the 50-day, but as of now we didn't. So now we have to test and see that 1363, 1365, because usually you snap back, retest broken trend lines, and then that's what you have to look at to see what we're doing there. And as far as the weaker sectors, you know, in stride, you want to take a look at the IWM that helped lead us lower. It still held this longer term trend line, held the 50-day moving average, which is constructive, and so did the semis. They came in, held the 50-day moving average. Now the question is, will this resistance hold the market? Can the bears sell this area? So it's another short-term spot for momentum traders to look at, but as a macro investor, things are very constructive.
Right. Well, David Peltier of Stocks Under 10 brought up a really interesting point yesterday when we were speaking about the IWM versus the SPY. Last year, the Russell underperformed 5% and the SPX outperformed by 5%. That 10% divergence, no one even brought up. So I really do think, you know, it's just something you look at within the short term and then.
Yeah, well, traders need things to grasp on.
Right.
They need relationships.
Right.
Like everyone's talking about oil. Everyone's saying it's a problem, but you know what? It's still oil up, stocks up. It's oil down, stocks down. So they're still highly correlated. Finally, and people will say there's a relationship change perhaps with oil, maybe above 115, when finally you have oil up, market down. That hasn't happened yet. That's a relationship that traders are trying to follow.
Right. Let's move along into the sector spotlight. We're going to look at the retailers. We haven't spoken about this in a while, and they've been quietly outperforming. We're going to kick it off with Lulu. They got that upgrade from Credit Suisse, and that consumer still continues to spend on that performance brand.
Yeah, Lulu has rewarded investors, and the RTH as a whole, before we get into that, has been a very strong sector. Look at the RTHs after I just showed you the other sectors. Look at the relative strength here. Above the 10-day, above the 20-day, looking to break out. So obviously stocks within this group are going to be showing you some beta or some alpha. I'm sorry. And here is Lulu, like you just said. Nice breakout after a huge move. Let me get this out of the way here. And, you know, if you wanted to sell the breakout or on this doji, you got a little bit looser, you know, this was your area to buy back, and it still looks like it could stay the course. Lulu is still very impressive.
Another one within that performance brand space, Nike, really focusing on cost control and those profit margins.
Yeah, Nike also, name you know, people are comfortable with it. It's been slowly moving up. Hasn't been really aggressive or hasn't been any huge real trades there, but if you look here at the chart, you will see Nike's rewarded investors and some traders at times. If you look at this trend has been intact for a long time. Here's your macro trend, and this one didn't even break the accelerator. Look at it. It's above the 10, the 10 and 20 days. So for short-term guys, I would watch this. Obviously, if it breaks, maybe you lighten up as a long-term investor. As long as it stays above this macro trend, stay the course on Nike.
Moving along to Tiffany, one of our luxury retail brands. This was a Barron's mention over the weekend. It's bouncing off its lows, and Barron seems to think that consumer group is starting to bottom and that the economy is starting to slowly improve.
Yeah, and with Tiffany, it's a different type of trade. It's not near the high end of the range. Investors have not really been as happy with it, but there's a potential trade here. Look at the chart of Tiffany's. You have a lower pivot. If you look at the chart of Tiffany, you will see here that it's just coming into some bigger resistance. So if Tiffany's can get above 68, I do think there's a trade here, and this trade could take you to fill this gap above 70. So if you've been in the penalty box as an investor of Tiffany's coming into this area, if you're in tier 1, I think you can get to tier 2 above this pivot here, and this pivot here is about 68.50 for a nice cute move to fill that gap.
And then we're going to take a look at Coach. They're presenting at the Bank of America conference this morning, and this is another name that still continues to see some nice growth.
All right, Coach. My wife loves it.
I was going to say, I love the brand for sure.
But obviously I don't love spending money on the Coach, but every now and then you have to take care of
Serena and I went shopping. That's why it's doing well.
There you go. So if you look here at the chart, let's see what's cooking here. Here's Coach. Last time it had a nice move. It broke right above this area, and then it flagged and stayed above, so that was a nice trade. You did see a pretty wide range bar right there. So did the market, though. So I would say short-term wise, this is your area to look at as a momentum trader. As long as it stays above, just say, what's this low here? Let me get my Quotron in there.
Your Quotron?
My trusty little Quotron. You'll see that 72.85 is now short-term support. And if it could hold above that, it could resume. If it starts breaking below that, you have the 50-day all the way down here at 70. So watch this area for short-term, long-term. It still looks fine.
And we're going to wrap it up from Coach to Dollar Tree. This name is still seeing 20% EPS growth, and it's really cheap.
And I wish I could buy my wife a pocketbook from Dollar Tree, but that wouldn't go well. I'd be looking for a new wife. Anyway, with that said, Dollar Tree slowly trending, looking good. If you look all the way back here from the lows, coming in. Actually, this is above all the moving averages. That's showing you really relative strength here. Flagging above the highs is always good for short-term momentum. If this were able to break above this area, what's this high here? 92.50. You could see some momentum come into the stock. This has been a performer.
All right, we're going to jump into a quick commercial, and when we get back, we dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to jump into the trenches with a little bit of a new theme for us today. It's been a slow, unconstructive grind, at least for the past year. So how do you pick some stocks? We're going to look at some oversold names. We did this play back in January-ish with P&G and worked out really nice for us. So we're going to look at some healthy dividend names, some good opportunities for defensive rotation. Kick it off with J&J.
All right, J&J, I don't think I've traded in years, but I know that people ride it out and methodically they can make money. So if we look at the chart here, J&J, and you will see, as a trader, it's hard because look at this grindy mess. No momentum, nothing here. But as an investor, it's fine. Not everything can move so fast. It's below the moving averages. So to me, as an investor, I think you stay in tier 1. But if it starts to get above 66, okay, which is big time resistance here, there might be a better trade, and above that area and holding it could take you to 68. I do think as far as speed and safety, perhaps this is good for you guys, but as a trade, until it gets above 66, I don't think traders would be interested.
Moving along to Merck and Pfizer, let's talk about these names together. We're in an election year. The FDA is on a big approval spree, so it makes sense to kind of be in these brand name companies versus the generics, and you have those really healthy dividend yields as well.
if you're playing it for that and you love the story, I don't know that much about these again. It looks okay. The chart, again, is not clean like high beta tech. It doesn't move as fast, but there are times when you can be in this. So if you look at Merck, we'll take a look here. This is when it broke above the resistance, okay, and gave you a nice move to the highs. It's been slowly grinding down below the moving averages, which technically is not great, but it did put a short-term bottom in yesterday versus 37. So again, if you want slow, you want methodical, you want dividend, maybe buy it short-term versus 37. But as a trader, you're really not going to get much action unless it starts to take out this resistance, and this is just say above 38.88. So just know what you're looking to get out of this one.
And let's also take a look at Pfizer quick. We've been talking about this one since December. I think we did a few options profits play with this name as well.
Let's take a look. This is probably the last time I looked at it, and here you go. This tends to move also. This was again when it kind of broke out right above this level here.
And that's when we spoke about it, yeah.
There you go. Sometimes you can time these as well. And now it is holding higher. It's very slow. This one is actually a little bit above the moving averages. I would say this thing gets above, what is this, about 21.65. It can go and test the highs. And there could be new highs in this for the year. So if you're in this group and you like it, this one looks okay. I think it looks a little bit better than Merck, actually.
Let's wrap it up with Boeing. Again, not a name that we trade as momentum guys as much, but you know what? This is almost like the P&G play that we had. It's the most oversold name within the group. And look, there's a lot of talk about some Iranian conflict going on, so you might see some more action in these core defensive names.
Yeah, and this one I didn't listen to my own rules. I tried to play this as like a momentum name. I'm like, oh, Boeing, this one can go also. Look at all these other ones going. And if you look here at the chart, this is where I start to get involved, right around here. I was in this little base here. I was like thinking maybe we get above 76 or so for momentum. Then it broke down a little bit. So as an investor, no big deal, because look what it did. Here's your low, higher low, came back into it and held. I do think you can get a lot of resistance right here around 74.90, but as an investor that wants something slow, methodical, and maybe a little bang for the buck just in case, we do need more planes for war, or just say that, they had a little bug with one of their Dreamliners that is getting fixed quicker. I think there's bang for the buck and safety here too.
Right. So let's move into quick hits for some quick cash. We're going to look at Apple following that iPad event yesterday in California.
Apple.
Did it move as much as like it typically does around these events? I mean, does that 500 level really impact that?
Well, the higher you are, the harder it is to trade, the more money you have to allocate to the trade. To me, it felt like a typical Apple event day. It was up $3 to $5 leading into it, and then they came out with the news and it sold off. And guys who traded to the downside, they made some decent money. If you look here at the chart, you will see with Apple, let me get this out of the way. Here you are. Okay, first of all, it opened up, they traded it off, it was down like $5, and then it came back and went flat. So at this point, I do think here you have to know your time frame. Here is this macro wedge that's developing as it spends time above the 20-day moving average. If you're a short-term trader, okay, you could be long versus this low here of 522. Or, yeah, exactly. And if you're looking for an upside break, it's going to have to get above this 547. So right now it's within an inner range here. You can micro scalp it, but for a bigger move, it's got to get above this like 547-ish to get on its way. And I think Goldman Sachs upgraded it today to 660 from 600.
Right. Moving along to winning, you've traded these names really, really well. That filled the gap from Tuesdays, or anything compelling going forward for today? Yeah,
I think that Win, if you sold into strength, we talked about 130, 133's resistance. It got that very fast. We did a video on how to buy it back into the weakness on Tuesday. If you did so, congratulations. Take a look here. I think you have some more room. Let me get my little Quotron out of the way. This is where I said we could retest, and look what happened. We retested it on Tuesday. You had a bit of a gap up yesterday. You made a few percent, and now it's up again today. I would say if you're in tier 2, if you were from tier 1 and you got to tier 2, I would sell some into this 125. If you're a macro investor, just stay long. And if you were just took it for an overnight trade for continuation from here, this would be a decent spot around 125 just to lighten up a little bit.
And speaking of Apple, let's revisit Amazon real quick.
Amazon, this is a tricky trade, and this is why I try and stay away from it, because as the macro pattern looks negative, it's showing relative weakness, it just doesn't break levels. It just doesn't cascade to the downside. I tried playing it to the downside with puts, so I didn't have to trade it every day, because every time I shorted it, I was making money, and you add to it, you lose. So I don't like doing that. If you take a quick look here, you'll see it's still in this lower wedge type pennant pattern. This was that support that it was never able to break. So at this point, there's not much you could do with it. you also have a downtrend right here that it'll be coming up to, which is probably around 190. So for right here, it's very, very noisy. But at some point, it's going to pick a direction. Above 191 and change, you could see higher prices. Below this rising trend line, you could see a macro move. And if you look here on the monthly chart, you'll see how important this area is. Below this 170, you could see a lot lower prices. So we need to see which way it's going to break from that pivot.
Moving along to the OIHs, it bounced off the 50-day, but this group has had a couple tricky trading sessions.
Yes, which goes to show you, again, know your time frame. Back in December, we put the pattern or the strategy to buy it 3 different times. And then recently, it lost some momentum, and it was considered a weaker group, which I said as well. So sometimes, you can't just hold, you can't hold tier 2, tier 3 the entire time. But anyway, just like one of those weaker groups like the Russell or the SMHs, it held the 50-day moving average. So overall, on a macro basis, it was fine. So look at the chart here, the OAHs. You will see, this on a macro level is what we were talking about, right? Let me get this out of the way. Here's the low, here's a higher low, and then look what it did. It held the 50-day moving average. And look at the big move that it had. So as a momentum guy, I know I recommended selling some, as it broke this area, which is, fine, you're allowed to sell some. And now let's see if we can come back and retest this 43. So if you're playing it for short term, this is your area that you'll see resistance and sell it. If you're in it for a macro move, which I do think the highs of the OAHs are not in, just stay the course. You just have to know which level you're looking at.
Let's round it off with Starbucks. This was our options profits play last Thursday, and this is a key theme that Scott and I talk about a lot. Names that break the 52-week high, and 52-week highs beget 52-week highs.
Yes, and this one is strong, and this one, every time the market wants to get strong whatsoever, it gets stronger. If you look here at the chart, looks like it's ready. It's probably breaking out above this level right here, right now. You take a look here. If you're an investor in Starbucks, you've been making a lot of money over the long term. As a trader, above this high here, I keep moving this thing around. I'm going to have to put that somewhere. That's 49.52, above 49.52. It's been consolidating long enough. You can get some nice momentum here in Starbucks.
Great. And you know what? We did a shooter trade on Thursday with Starbucks, and we just bought some straight calls that were nice and cheap, so that position's working out well for us. So at the end of the day, every day, come back, revisit the charts with Scott and the team as he recaps on Options, Profits, Real Money, and T3Live.com.
Have a great day trading.